you are joining me for a Zoom call with Paul Mahoney of Nova Financial, Nova Financial being a partner of Property Tribes. And Paul, great to see you. And I've sort of thought of you and I wanted to discuss this topic of whether buy-to-let is still viable in the post-Covid-19 landscape, and obviously this is very much a trending topic on Property Tribes. But before we start to talk about that, just really, because you're a landlord yourself, how have the last 8 weeks been for you in your landlord life? Have you had many tenants not paying the rent?
No, I haven't actually. Personally, it's been absolutely fine. And I think that's probably because of the types of properties and the locations that they are, if that makes sense. You know, all of my tenants are young professionals, and all of them still have a job. Most of them are working from home. However, you know, they're still able to afford the rent and therefore are still paying the rent. So yeah, I know that some people are in a very different position to that, but luckily, and I suppose, you know, that there was a thought process that went into that, so far as who do I want my target market to be, and making sure they are in a good financial position and that sort of thing, has resulted in a positive outcome. Yeah.
Fantastic. Well, same for me. I've only had one tenant in a 4-bed house in Basingstoke, not able to pay their rent. Arranged a payment plan with them, they've stuck to it, and now I'm just assessing what their situation is now that we're coming out of lockdown. But with regards to Nova, I really like the way that you approached the whole COVID-19 crisis, Paul. You were very visible, you did lots of webinars, you created your Confident Property Investor program, and you were really out there looking to keep landlords engaged, looking to help them, looking to give advice, and I just really wanted to commend you for doing that, because I know that a lot of people have got a lot of value from the content that you've been putting out over the last few weeks.
Excellent. I'm glad to hear that. And look, I must say I'm not an absolute saint, and it is slightly self-serving. You know, we have to do something, don't we? At the end of the day, we were booked in to do, I don't know, I think we've missed 5 or 6 property or investment focused in-person exhibitions. So, you know, none of which we've got our money back for. So it's, you know, we have to do something, and a big part of that has been, as you say, offering this value. And in return, we've kind of found our niche there, in that the webinars have been pretty much fully subscribed twice a week, every week, which has been brilliant for us, because it's kept our business turning over and, you know, kept the interest up. So it's mutually beneficial.
Indeed, and I think it's interesting that during lockdown, a lot of people had a lot of time on their hands, and the whole COVID-19 crisis, I think it's actually had a positive impact in some strange ways. One of them being that people have had a chance to rethink about what matters to them in their lives. Yeah. And so many people have been saying, "Oh, I've just so enjoyed, you know, having quality time with my family and being able to work from home." And of course, this is really one of the main reasons that people get into property in the first place. I mean, certainly when I met Nick and we wanted to have a certain lifestyle of being able to travel the world and have our adventures in our motorhome, you know, property was a way to achieve that. So I think it's very interesting to see so many new people on Property Tribes, on your webinars, showing an interest in property investment and researching it.
Yeah, absolutely. I think that's probably the most common theme that's come out of it, isn't it? You know, it's forcibly disrupted our, you know, sort of Monday to Friday 9 to 5 lives. It forced us to stay at home with our family, which for some people is good, and for some others perhaps not so good. But yeah, you know, certainly for me, that's been the most positive thing, is I've never got a chance to spend so much time with my daughter as I have, and my wife, of course, as well. Yeah, and that, I think, will potentially spur some people into action with regards to, you know, building a property or any portfolio for that matter, you know, investing to be able to give themselves some more freedom. You know, it's something that I cover in quite a bit of detail in my book, that, you know, we spend so much time and so many years working to earn money, but very little time ever thinking about how to best utilize that money.
Mm-hmm.
You know, most people spend everything they earn, and therefore, what happens when they have to retire? Well, you know, the pension is unlikely to be around in any substantial form for much longer, I would have thought.
No, they're really going to be knocked by COVID-19 as well, aren't they?
Yeah, exactly. So I think this will spur, well, hopefully anyway, I think it will spur some people into action so far as trying to create that freedom.
I agree, and that is positive. Now, let's talk about, you know, a trending topic on Property Tribes, and that is buy-to-let still viable post COVID-19? Now, clearly, we're both landlords. We both have been involved in the property sector for a long time. You know, for our part, we're just going to carry on. We still believe that property is a viable investment, and really the fundamentals actually haven't changed.
No, you're right. The fundamentals remain the same, so long as the fundamentals you've been using have accounted for situations like this.
Yeah.
And I think that is the big difference, what you mentioned, so far as people who've been in the industry for a while and understand that recessions happen, you know, every cycle, however long that is, it's usually about 10 years or so, you're going to have some form of recession. And it's usually only lasts for, you know, 6 to 24 months. But you need to account for that. And that's where some people lose their portfolio or lose their properties because they haven't accounted for those types of situations. It's easier to make money when the economy is booming. It's not so easy to survive when it's not. So yes, I agree. The fundamentals are the same. Definitely agree it's still viable. I think that there is a bigger gap between what works and what doesn't, or certainly what I'd be worried about and what I wouldn't be worried about in a post-COVID recessionary type period. And in my view, you know, I think, well, in talking with various industry professionals who, you know, across the spectrum, you would hope kind of understand what they're talking about. The biggest worry of post-COVID is job loss and a rise of unemployment, and therefore the impact the sort of flow-on effect that might have on property, which is of course sensible because most of us live where we live because it's relatively close to work, or at least convenient for work. Now, therefore, in my mind, if I was an investor in smaller cities and towns, that would be a worry, because a small amount of jobs and therefore people leaving a small town has a big impact. Whereas a bigger, more substantial sort of city economic employment facility sort of hub, that they will be a lot more robust. Because there was, regardless of how bad this recession is, even if it's the worst recession, even if we reach, you know, record unemployment rates, there will still be jobs there to some extent, and therefore there will still be demand.
Well, indeed, and also landlords do have a form of rent guarantee in LHA Universal Credit. So we may see a lot of tenants moving on to that, and I think this is where, you know, landlord education is so important, because there'll be a lot of landlords out there that thought they had, you know, professional tenants for life, that, you know, they might be from an industry that's been particularly hard hit, like the aviation industry and the hospitality industries, and landlords are going to have to engage with the DWP and the LHAUC process, and they're going to have to brush up their knowledge on that, aren't they? Yeah,
I think that's definitely worth being aware of and educating yourself on. You know, it's an interesting point you say about the industries that are going to be hurt most by this. And it just reminded me of a conversation I had with a client a few days ago who was saying that they were thinking of buying near Heathrow, because Heathrow is always going to be there. And I thought it was very topical to discuss with them because, of course, Heathrow is heavily driven by the airline industry, and pretty much solely that industry, which is probably the biggest one to be hit by what's going on at the moment. Whereas, you know, we would prefer to focus on locations that are driven by various industries. And therefore, if one or two start to struggle, well, others will fill the gap.
Yeah, indeed. And it's not just the headline industry, because there's lots of other sub-industries that start to, it's almost like dominoes going over. For instance, in Derby, they make the Rolls-Royce engines for all the big aeroplanes, and they're talking about losing, and forgive me if I've got this wrong, but I think I'm correct in saying they're thinking of they're going to lose about 8,000 jobs in the the engine industry, the engineering industry. And then we've got all the people that provide all the catering for aircraft. So it's almost, you've got to look beyond a headline industry that's going to be affected and think about the other sub-industries underneath that are going to be kind of collateral damage of that. Sorry, I've got a Skype call coming in. I'm just going to get rid of that. Sorry. Okay.
So you're right. There's lots of flow-on effects. And that's quite interesting as well when you look at the property, the housing market is how many flow-on effects there are in the housing market. Mm-hmm. So we haven't seen, we've seen stimulus into employment or wages and stimulus for businesses. We haven't seen any stimulus for property or housing, mm-hmm. but it would seem a sensible thing potentially for the government to look at. It's certainly something I've seen proposed in Australia already to help stimulate the property market, because there is so many flow-on industries in property and construction.
Yeah, very, very true. Very true. So let's say we've got viewers watching who have been reflecting on their life and their future during lockdown. They want to get involved in property. What advice would you give them of where to start in this post-COVID-19 landscape?
Well, I think sort of going back to what we were mentioning before, so far as the fundamentals, stick to the key fundamentals of investing in property. And in our view, that is focusing on locations that have large and strong tenant pools, a broad range of industries and employment, mm-hmm. facilities, amenities, infrastructure, and infrastructure spending. So positive improvement in that location. If we're ticking all of those boxes, then we are creating very strong want or need for people to live in our properties. Mm-hmm. And at the end of the day, that's what drives rents, that's what drives resales, that's what's going to create safety. Mm-hmm. And desirability is very important as well. Obviously, we want to be getting properties at the right price, but they need to be desirable, or they need to be made desirable. If you're a bit more hands-on, then buying something that's a bit run down, adding some value can be a good approach. If you're not, if you don't have the time to do that sort of thing, then you need to buy something that's already desirable to your target market. So that's pretty high level stuff that you would have been doing anyway. But we've been getting a lot of questions about this as to whether our strategy or our approach to investing in property has changed because of the current environment. And the answer is no, because we were aware that at some point we were going to have a recession, and we needed to create safety even through those bad economic times. And at the end of the day, there's only two main risks when it comes to investing in property with mortgages. And that is having a tenant and being able to service your mortgage. And the two obviously tie into each other. Mm-hmm. If you've got a tenant, it doesn't really matter what happens to the value of your property in the short to mid-term, because you're still receiving rent, you're still servicing your mortgage, and hopefully you're getting some net income or net return as well. Mm-hmm. And obviously we're in historically low interest rate period. That likely will remain for the foreseeable. Yeah. Rates are unlikely to change anytime soon until at the very least we're out of this recessionary period. So I wouldn't be too concerned about that. Mm-hmm. But making sure your property is very rentable, or if you're buying new properties, if you're adding to your portfolio, making sure they're extremely rentable properties, because that creates safety.
I totally concur with that. I think it's also just to consider that tenant priorities may have changed because of COVID-19. We've got a thread on Property Tribes, which I'll pop underneath this video, where there's indication from the portals that people have changed their priorities about when they're filtering their searches for property. Now, an obvious one is home office is becoming very, very popular. Another one is garden space. And I think, again, as we said earlier, COVID-19 has made people reflect on their situation and think, well, you know, maybe it's never going to be the same as it was before, and I want to make some changes to address that. So do you think we'll see a few little nuances there of tenant priority changes?
I think there will be nuances. You know, so looking at some of the figures that have been published recently so far as how many people might continue to work from home after this, some of the figures I've seen have been somewhere between 20 to 30% of the people who previously went to work will stay at home. And that's a pretty big portion of the overall workforce. And again, I think this highlights the importance of livability. You know, and if we relate that to landlords, you know, landlords that bought sort of cheap, less desirable properties that were still rentable because of their location, they might be less attractive now because people are spending more time at home. You know, the young professional that rented that place to just rest their head at night because they're never there may change their preference a little bit. And actually, you know, having a more livable place, like you say, with, you know, maybe a study or a garden space or a big balcony or the direction of the flat and therefore the amount of sun that it gets, you know, corner-facing, dual-fronted apartments, for example, are much more livable, like the one I'm talking to you from now, than the ones that face the internals of a development. So I think that type of thing will have more of an impact on rentability. It always had an impact on saleability because, you know, owner-occupiers are the biggest portion of the resale market and they're emotional buyers. So that stuff was more important in the resale market, but I think it will become more important in the rental market now as well, with a bigger portion of tenants spending much more time at home.
I think it's brilliant, Paul, that you've actually linked the sales market and the rental market up like that. I think you're absolutely right. And any new landlord starting out is very much going to have to put themselves in their tenant's shoes and actually look at the property and how it's going to be lived in and so on, and take into account the changes that COVID-19 may have brought. And we, of course, it's still early days, so we're going to see this kind of come out more in the wash in the coming weeks and months. Just really to start to wind this up, Paul, do you have any strategies that you don't think are viable or certainly going to struggle going forward? Because, you know, if we talk about commercial property, we're already hearing that a lot of companies are recognizing that workers can actually work from home and carry on. So I can see there's going to be issues there. I mean, I think I'm right in saying that Pizza Hut is going to go into a CVA. Obviously, a lot of the big retailers are really struggling. And also, I'm slightly fearful of HMOs because I feel that people have had bad experiences in shared accommodation where perhaps a housemate hasn't observed lockdown properly or brought you know, a stranger into the property or hasn't observed hygiene and social distancing. Again, tenants rethinking how they're going to live. And if rents do drop a little bit, we'll find that rents start to come down to more of a level of like a one-bed flat for you know, a double room en suite in an HMO.
Look, I agree with everything you've said there. I'm still buying properties. I'm in the process of buying 4 properties at the moment, and I'm still proceeding with them all. They were all pre-lockdown that I started with that, and I'm still going ahead. And the reason I'm confident with it is I got a good deal initially, and they're all either in city centres or very close to major city centres. And I'm pretty confident. You know, something that I did mention that I have been talking about a lot lately is microclimates. Within the overall property market. And what I think is a little bit silly is that the media tends to focus on the UK property market, but there's no such thing. You can't invest in that. You know, there's no index. No one can buy the whole of the market, so no one can get a complete spread. You can only buy individual properties in individual areas. What we try to look for is driving factors that are external to the overall market. And a good example I've been using lately is there's a little portion of central Birmingham called Digbeth. And it's kind of the underloved area of central Birmingham. You know, for those in London, I kind of relate it to Shoreditch 10 plus years ago, Stratford 5 years ago, and Deptford now.
Yep.
You know, they're areas that have already gentrified or are gentrifying given their proximity to central London. And This area is kind of 20 to 30% cheaper than the rest of central Birmingham. There's massive amount of development, huge £1.5 billion redevelopment by Lendlease. The HS2 station is there. And then we've got the Commonwealth Games in just over 18 months, billions of pounds being spent on a small, underloved area. And in our view, you can't do that without having a positive impact. That's just one example of, I'm buying 2 properties there at the moment. And I'm very confident that even if the UK property market goes backwards by 5 to 10% over the next 12 to 18 months, that area will still move forward. So I'd encourage people to look at things in that way. Focus on the best possible locations with the strongest driving factors, and don't worry too much about the overall market.
No, I agree with you. And I think just to close this out, Paul, whenever there's been a crisis, it's not a good idea to kind of make knee-jerk reactions or decisions. Property is a very long-term investment. That hasn't changed. We're talking of a investment horizon of 15, 20, 25 years. Obviously we've got people thinking about, should I buy this week? Should I buy next week? Should I wait and see what happens with the market? I think it's interesting because your favourite saying, it's not timing the market, it's time in the market. And I always refer back to that because it's so true. And I think one way to see what's going to be happening with prices is to look at what's going on in the auctions, because they're real time results of what properties are selling for, aren't they? So if somebody's thinking of getting involved, should they be starting to move forward now? Should they wait? Should they, what should they do? What's the time?
I think with the types of locations and properties that we tend to focus on, it's somewhat comparable to investing in good quality stocks and shares. There's never really a bad time to buy if you're buying for the mid to long term. And therefore, rather than trying to time the market, as you quite rightly say, invest your money when you've got it and invest for the mid to long term. Now, that doesn't apply to all types of properties in all locations, though. Obviously with auctions, you need to be a bit more careful because generally properties that are in auctions have something wrong with them. And you need to understand that. And you either need to have the cash to buy or have the finance lined up to act really quickly. So that's not really the type of property we focus on because it's more reliant on the buyer's skill set and time to organise all of that, whereas we focus a bit more on the passive side of property investment. So people talk about the property market being on lockdown and nothing happening. We had our busiest month of the year in April for transactions.
Wow.
And probably the reason for that is most of what we do is new build and off plan. And they were pretty much the only properties you could transact on during the lockdown. But I suppose also our clients tend to take a much longer term view and they're focusing on major cities and getting properties at the right price. So you can't really go too far wrong with that type of property in our view. And that's still that we've continued on in a very similar fashion to how we were prior to COVID-19.
Okay, well, just for clarification, I wasn't suggesting that people should, that inexperienced people should purchase property at auction, because I think that is very high risk. The anagram of auction is caution. It was really more just saying that people that are looking at how the market's performing, the auctions will be a good indicator because they are real time and they will start giving us data, because it's early days yet. The market's only been open about a week at the time that we're recording this, and just nobody knows. And I think just to say towards the end here, Paul, when nobody knows, when it's unprecedented, as we said right at the start, the only thing you can go on is fundamentals. Yeah,
and it's a good point you make there, Vanessa, so far as the time that property takes to reflect price changes. We speak with people all the time and they say, oh, look, I'm just going to wait a month or 2 months. And the reality is nothing's going to change in a month or 2 months. The average time it takes to buy a second-hand property in the UK is 6 months. It takes a long time from the point of showing interest to actually owning that property is an average time of 6 months, and half of them fail. So actually you could say the average time is 9 months. And therefore for price changes to actually reflect takes about that amount of time. because it's all based on the actual transaction value.
Yeah.
So property's a slow moving thing. I think that's a positive, that it's much more stable. And therefore it's not really about timing the market or trying to get, good, I suppose, opportunistic deals, which, are available a little bit at the moment because transactions have slowed. So you can get a bit of opportunistic deals at the moment, but I wouldn't be waiting 6 to 12 months to try to pick the bottom of the market, because you're right, no one knows. The market could pick up from here because there's a lot of pent up demand.
And I think also, the finance side of things as well, there are currently products available up to 85% loan to value.
Back really quickly.
Which it bounced back very quickly. But
we were getting asked a lot of questions, 2, 3, 4 weeks ago when the market froze. Has the buy-to-let mortgage market been withdrawn? And I think that was because of some of the media around it that said that, but it hadn't. They were just on pause. But actually, you're right. 85%. I think Clydesdale announced today they're doing 80% buy-to-let mortgages, which they weren't doing pre-COVID-19. So I think some of the lenders are seeing an opportunity to be a bit more flexible now to get the market up and running again.
No, I agree. But also I think, if you have the opportunity to qualify for finance, grab it, because if there are any further aftershocks from all of this, then the market might start going very, very conservative again and going back down to your 60, 50% LTVs. So again, you can only do what you can do with today's knowledge. None of us can buy property in the past. None of us can go forward into the future and buy property because we don't have a time machine. So the only time that any of us have is the actual present, today, the day we're in. And you need to be informed when you're making these kind of...
And that's actually an excellent point that you make there, Vanessa. A lot of people that talk about trying to pick the bottom of the market don't realise that if we're in a full-blown recession, lending will be significantly scaled back. So unless you're a cash buyer, it's much harder to buy at the bottom of the market. Whereas if you were to get in now, it's much easier to get finance.
Yeah, and it's very encouraging that the lenders are coming back just as quickly as they disappeared and coming out with new products, actually. So I think that does show some confidence on their part that the market is going to come back healthy and strong. Okay, Paul, well, as ever, thank you so much for sharing your insights with us. Always value your opinion and your insights. And we'll pop a link underneath the video to your Confident Property Investor course. I did have a lady contact me on Facebook and ask me if there are going to be recordings of it.
Yes, there are. There are recordings. We obviously haven't launched it yet. We've just been sort of piloting it for free via webinar format through Property Tribes. And we're currently running it at the moment. So, it started yesterday. So if anyone wants to jump on, then they'd have to do it pretty quickly.
Awesome. Well, I'll put the link on underneath this video so that they can do that. So great talking to you as ever, Paul, and we hope to catch up with you again soon, because there's so much to talk about the post-COVID-19 landscape. We've really only just scratched the surface, and it's still all unfolding.
Moving target as well, isn't it?
Yeah, it's very, very interesting times, as they say. So we're signing off. I've been talking to Paul Mahoney, MD of Nova Financial. And if you do like what Paul has to say, do get in touch with his team. Paul, you offer a free consultation, don't you? Yeah, absolutely. So initially just a conversation on the phone, and then if suitable, we offer a 60 to 90 minute sort of review of your situation and determine if there's a fit and if we can add value. All via video conference at the moment. Brilliant. Well, thanks for joining me, Paul, and hope to see you soon. Thank you very much. Thank you.